The markets had their largest point gain ever this week after Thursday's CPI. Let's take a look at what happened and where we might be going. What's up everyone, it's Brandon from Amphibian Trading. We've got a lot to cover in tonight's video, so let's get right into it. Last week we covered this chart of the Nasdaq. Things weren't looking good. We'd taken out the lows from June as well as the follow-through day, and then we got rejected at those same levels when we attempted to bounce on Friday. Let's fast forward to today, and you can see what a difference a few days makes. We started the week with more chop, more of the same action getting rejected at those same June and follow-through day lows. But then Thursday, we get the CPI report pre-market. Here's a 5-minute chart, and you can see when that report comes out, we just take off and rally like a bat out of hell. So with that release, the Nasdaq had its largest ever one-day point gain. And with that point gain, the Nasdaq also notched a new follow-through day, with the low of the day being above the 21 exponential moving average. It pushed back through the 50-day moving average, which is the red line, and we flipped back to net new highs, which for those of you that don't know, that's just the difference between the number of stocks making a new 52-week high versus a new 52-week low. Then on Friday, we had continued strength. The low of Friday was actually above the 50-day moving average, which is pretty significant. So why did we get such a powerful move? Well, let's take a look at the CPI numbers. CPI came in lower than expected on all measures, and not only did the numbers come in lower than forecasted, but they came in pretty well below those forecasts. If you look at the core CPI month over month, this came in at 0.3%, which is half of what it came in at last month. 50% decrease in a month is pretty significant. And what this means to the market is that what the Fed is doing by raising interest rates, it's quantitative tightening, it's starting to work, and it's starting to make its way into the economy. So for the market, that means that peak inflation and peak financial tightness could be things of the past. So the question now is, where do we go from here? Are there enough stock setups to support the market moving higher, or does this end up being another bear market rally like we've seen throughout the year? One thing we'll want to watch for clues is going to be the dollar. So if we pull up the chart of the dollar, you can see we have a series of lower highs and lower lows. We're also below all of our moving averages except for the 200-day, which is actually where I think the dollar could be headed. That level also lines up pretty well with the low from August. But we'll see what happens. If the dollar does continue to weaken though, that should bode well for stocks. So with Thursday's action, I initiated 3 new positions and I added a 4th on Friday. I'm going to cover the setups I took, explain why I took them, and then I'll cover some new ideas as well. But before I get into that, if you want to go ahead and get my trading plan every night for the next day, make sure you like and subscribe this channel and sign up for the newsletter that's linked in the description. Okay, so let's take a look at the trades I took. Okay, first up is ALB. So this one broke out of this cup base this week, and looking at the base, it's very healthy. You can see we have some tight closes here on the left side, as well as more tight closes here on the right-hand side. We do have this 1 week in the middle though, that closed on the lows. It was up on volume. However, it was news related, and look at how quickly the stock recovered the next week. We also now have 4 weeks up in a row, all closing in that upper range. So that's very positive price action. Volume has also been picking up these last couple of weeks here, and if you look at the relative strength line, it's in new highs as well, signified with this green dot. So very positive action overall on the weekly chart. If we go ahead now and look at the daily chart, you can see this same cup base here. We broke out and pushed above this left side high on Tuesday here on an increase in volume. This is where having a trading plan comes into play. So in the current market, standard breakouts haven't been working, and I knew that CPI data would be coming out on Thursday, so my plan was to watch this for a failed breakout pullback to the 21. However, Wednesday we got this inside bar here and it was red, so that gave us the potential for a kicker pattern on Thursday if the CPI data came in lower than expected and the market rallied. So that's exactly what happened, and I initiated my position on Thursday right on the open, buying this gap up. We had more positive action on Friday. However, we did get extended up here, and you can see there was some profit taking by short-term traders. So from here, I do expect some sideways consolidation or maybe a slight pullback. We'll see what happens, but this is one I'll be looking for more low risk entries to add to my position. Next up is Lululemon. This one broke out of a classic cup with handle base this week. You can see throughout the year, Lulu had been falling with the market. We bottomed back in May here and rallied just about 42% before forming this classic cup with handle base. So we have the relative strength line, not at new highs, but it's pointing towards that 1 o'clock direction, which is what you want to see. So if we flip over to the daily chart, you can see this same cup with handle structure here, and we also have a very nice trend line coming down from the left side high of the base across the highs of this handle area. So on Thursday with the CPI release, this gapped up through the standard cup with handle pivot point. The trend line also had a kicker pattern. I bought this right on the open. It's acting well so far. Similar to ALB, we did see some profit taking on Friday. However, the overall action remains strong, and this actually closed above this left side high of the base. So this one is acting very well so far. The third stock I bought on Thursday was On Semiconductor. This one's forming this basing structure here. I'm kind of viewing it as a cup. However, you could also view this as a double bottom base. We have relative strength at new highs before price, which is signified by this green dot, and we have volume coming back in on the right side of the base. So this previous week, we did close red and it was on an increase in volume. However, it did close in the upper half of that range, so that is actually an accumulation bar. So the volume on these previous 3 weeks now has been above average as we're building that right side. Diving into the daily chart, here's that same basing structure as well as this nice trend line coming across the top. So I bought this one on Thursday right at the open as well. This one had multiple buy signals I was watching. It pushed through this trend line. It had a kicker pattern, and it also reclaimed the 10-week and the 50-day moving averages. So 3 signals there that got me into this stock. The volume on this Thursday bar was well above average as well. So overall, really strong action here. The question is now, do we form some sort of handle here, or do we push above these left side highs, maybe have a failed breakout pullback to the 21, or just keep moving higher? We have to be ready for each scenario, so we'll see how this one ends up playing out. Okay, the last trade I took this week was Enphase ENPH, and unfortunately, this one stopped me out in the same day. So we have this cup with handle pattern here. This one did come up very fast from the bottom. You can see with this nice large blue bar here. So that is something to pay attention to. Sometimes that is a flaw and it just needs a little more time before it's ready to push. But overall, the structure of this base is still good. We're above this 10-week moving average. So I still like this one. Moving into the daily chart, here's that same cup with handle pattern. You can see we had this gap up, strong reaction to earnings. We pulled back down to form the handle. And then on Friday, we attempted to push above it. However, we did reverse from there. And as the stock went negative, I ended up closing my position. If this one can reclaim that pivot now, it's one I'll be looking to get back into. I do like the overall structure of the stock still, as well as very strong fundamentals that this one has. All right, so let's go ahead now and take a look at some potential new ideas. First up is LTHM. This one is in the same group as ALB, and it's also acting well. Normally, when you can get multiple stocks from the same industry group setting up, that's a very positive thing. So this one has attempted to form a couple bases throughout the year. We had this first structure here that was very wide and loose. The bars were all over the place, and this was also about 41% deep, which is deeper than we'd like to see. We then attempted to form another base here, also too deep. It was 44%, and this one also, many of these weeks took place below the 40-week moving average, which is this black line, so you don't see that in proper bases. We rallied up, and now we've gone on and formed a proper cup base that's only 29% deep. We also have the relative strength line at new highs before price, signified by this green dot here. Volume hasn't really came pouring back into this stock yet on this right-hand side. However, we did get this week here. It was a red week on increasing volume, but again, this one closed in the upper half of that weekly range, so it is an accumulation week. If we dive into the daily chart, you can see that same cup base here. And one thing I want to watch is for this one to form a handle. You can see we've had some resistance right around this $35 level. We hit it multiple times on this left-hand side, and now we pushed above it on Friday. However, we did sell off and close below it. So one thing I'm watching is for this to form a handle there. However, we do need to be ready for multiple scenarios. This could just as easily gap up on Monday and form a kicker pattern. I'll post a link in the description for a video I made explaining the kicker pattern in detail. Or this could also break out of the cup base next week and just keep pushing higher. It could also form a failed breakout pullback. Either way, we need to be ready for all the scenarios. You don't want to miss a potentially leading stock because you weren't prepared. Next up is MLBY or Mobileye. This one is a recent IPO, and those are rare nowadays. You don't see many new IPOs during a bear market, but the IPOs that do happen in a bear market tend to be the stronger ones. So this formed a nice IPO cup base here. It closed just above the pivot on Friday. However, it's still right in that level. So IPO bases tend to be a little bit riskier, but IBD research does show that these IPO bases also tend to have some of the best gains. So whenever there's a proper IPO base, it's something you want to be paying attention to. Last one for today is TMDX. So this one was actually one of the first stocks to bottom all the way back here in February. And look at these massive blue volume bars as we advance. So now we have this nice cup base. We have tight closes throughout. The volume really dried up and then picked back up on this right-hand side. So the base is healthy and we're still sitting right at that breakout level. Looking at the daily chart, here's that same cup base. We had a very powerful earnings gap here, and now we're just staying tight in this range. So this has the potential to have a kicker on Monday if it gaps up. We could also have a failed breakout pullback to the 21 exponential moving average. That would be a nice entry as well. So one thing to note with this one though is the company doesn't have any earnings. They lose money. However, it has triple-digit sales growth and the overall price and volume action is very healthy. So there are some new ideas to watch for next week. Remember to prepare for multiple scenarios and remain patient as the markets and many of these stocks are extended short-term after Thursday and Friday's big moves. Thank you for watching, and if you enjoyed this video or found any of the information useful, please go ahead and hit that like and subscribe button to stay up to date with all my latest videos.